we have just concluded a pretty challenging week in the markets. The S&P has dropped on the week, as has the Nasdaq by a little bit more, as well as several individual holdings that I personally hold near and dear, including Medical Properties Trust, Intel, and Walgreens Boots Alliance. Now, one of the things that started this sort of latest dip in stocks is that Moody's downgraded 10 major U.S. banks, citing concerns about economic conditions, which could weigh on the bank's earnings in the short term. And this is just another one of those little things where I think the market's looking for reasons to have a correction, a pullback, and whatnot. I think a lot of this 2023 rally has sort of been a little bit of a false rally. I think it's, the calm before the storm, call it what you will. Now, I talk a lot about the emotional side of things, the having the temperament to be a good investor, a good steward of capital. Now, I'll get into some of the reasons for some of these individual stock falls in a moment, but I want to give you some reassurance from the great Stoic philosopher and Roman Marcus Aurelius. He says, "You have power over your mind, not outside events. Realize this, and you will find strength. The happiness of your life depends upon the quality of your thoughts." And this is another good one. If you are distressed by anything external, the pain is not due to the thing itself, but to your estimate of it. And this you have the power to revoke at any moment. So, with that being said, Walgreens, apparently, legal trouble once again in the state of Virginia. So, it has to do with supposedly misrepresenting some type of eligibility for a hepatitis C drug amongst people in a certain type of coverage specific to the state of Virginia. Now, a lot of the different troubles with Walgreens lately have been to do with legal trouble, to do with opioid-related issues, which they paid out a handsome sum earlier this year. And then they got caught up in sort of a political debacle over certain types of reproductive-related medicines, we'll say. And that has been just a drag on Walgreens this year. However, ultimately, I don't have any specific fear over Walgreens going away or going anywhere. They're very, very heavily ingrained in the healthcare space in the U.S. and in the U.K. through their ownership of Boots in the U.K. and, of course, the titular Walgreens in the United States. I don't think they're going anywhere. They may have temporary trouble, but ultimately they're a staple. In fact, there's so many neighborhoods I've seen that are where the Walgreens is pretty much the only consistent business there that's open, that provides essential retail goods within walking distance in a lot of areas. So I think Walgreens has overall a good business model, and the trouble they're facing right now likely temporary and likely overestimated by the market. Or at least that's the hope as a shareholder, right? Intel, they've taken a hit this week. To be honest, it seems like it's just standard disappointment about deals falling through or other such things. Maybe they haven't talked about AI enough. But overall, I'm actually pretty happy with how Intel has done so far in 2023. And I think big picture wise, as long as they stay on target with achieving the nodes that they're aiming to achieve and as long as they continue to build up the foundry business, etc. I think in the long run, they'll be good. The little blips along the way, I think, are fine. You can't expect everything to be just a vertical line up of things going perfectly all the time, with businesses as big as Intel trying to have many irons in the fire. So we're good there. Now, MPW has been just quite the journey, okay? It's been a bit of a roller coaster the last 6 months or so. Now, the recent pullback has been sort of about the 1-2 punch, right? With earnings, I see that people were expecting a dividend cut potentially because non-cash items ended up on the funds from operations. Now, funds from operations overall, just like the number itself, looked really good. But when you add in the non-cash items, it looked like they didn't have quite enough funds from operations. They were a penny short on actually covering the dividend with their normalized FFO when you take into account the non-cash items, which, while somewhat concerning, they did just sell off an asset that basically brought in like $105 million, which, I don't know if they're going to, hoard that cash in order to maybe pay down some debt with it, or if they're just going to use it to make sure they don't have to do a dividend cut. Not 100% sure how they'll allocate it. We'll have to wait and see. But this latest issue it's more about the California regulators deciding that they don't want to let the Prospect deal go through, where MPW is going to sort of take some steps to help Prospect get back on track financially and be able to start paying rent again and not, basically go bankrupt. And because if Prospect goes bankrupt, the hospitals that they rent from MPW potentially could end up going vacant, which honestly, would that be good for the communities those hospitals serve? Probably not. Would that be good for the people who work at Prospect? No. Is it good for shareholders of MPW? Certainly not. So, but, you can always count on the California regulators to screw up just about anything that they put their hands on. So that is what it is. However, MPW management is pretty adaptable, I think, and I would rather be patient and see what, solution, if any, they come up with for this situation. And again, don't panic, right? Be like Marcus Aurelius. Be a stoic. Don't let the external influence you and have control over you. That being said, I do think that these overall drops may represent good opportunities for deal hunting. So, I plan to, especially if, prices keep going down or stay lower and it looks like we actually enter a real major correction or downturn, which we could be in such a situation, I'll start running more screeners and I'm going to be on the hunt for deals. And especially when it comes to very, very high quality businesses, I may be looking for entry points into some companies that I may have previously considered overpriced, simply because I think I could use a little bit more of that in my various portfolios. So we might be talking about, hey, Apple, I understand, has, had some tumbles lately. So they're not, if they're not invincible and they get down into a region where I think I can get a good entry point on Apple, I'd be ecstatic to be getting in on Apple. If Visa or MasterCard happen to take some hits, hey, cool. I do still have an open put on PayPal that's slightly in the money. I could end up getting assigned, but I may not. Depends on exactly where the price lands. There's just a lot of different possibilities that, open up. I think red is an opportunity. And so we'll see what comes. And let happen what it may. I will sleep fine at night, and I hope the rest of you will as well. Remember, the likelihood of if you have any sort of diversification, the likelihood of everything like going to zero and crippling you permanently is pretty darn low. Okay? So try not to let it eat at you, and try to see the red days as opportunities, not as catastrophes. Take it easy, everyone, and have a fantastic Friday. Oh, by the way, like and subscribe. Join my Discord. Link in the description. Cheerio, gotta get down on Friday.